Disney television unit has been hit with 140 layoffs. Disney has been cutting their way to profitability. That will only get you so far. Let's be honest, Wall Street doesn't seem to have a whole hell of a lot of confidence in the Walt Disney Company. Online. By the time we get to the Disney earnings call next week, Bob Iger will be bragging about having $2 billion blockbusters this summer. That's going to be one of the first things he talks about on that earnings call.
Of course he will.
Yeah. So meaning that we'll already be there. Deadpool will be at that billion mark by Tuesday morning, because remember, Disney's going to have that information before anybody else publicly does. Speaking of, I want to bring this up. We knew more of this was coming. Disney television unit has been hit with 140 layoffs, including cuts at Nat Geo, which they acquired when they bought Fox. They're cutting more folks. And the reason I bring this up, this seems like small potatoes, and it kind of is, but it goes to illuminate something that I have been saying now for the last at least 3 to 4 months. The last earnings call we had with Disney back in May, they talked about, look, we made a profit on Disney Plus, right? They said, but we want to caution people out there listening to the call that may not be linear, I think was the word they used. And no pun intended, just meaning that don't expect, okay, we had $40 million in profits on Disney Plus or DTC this quarter. It'll be more next quarter and more and more and more. They said, no, it's going to kind of pitch. It's going to go up and down for a little bit before we see steady climb. And basically what Disney was telling us was what we knew is that they had been cutting their way to profitability. Disney made a promise to everybody that they were going to show a profit for direct-to-consumer, for streaming, by the end of this fiscal year, which is September 30th. That's literally 2 months from today. Well, they've already shown a quarter of profit, so that's why they got one. All they had to do was show one. Right? And they made their promise come true. They've already done it.
I don't know about that one. I call BS on it.
Well, I agree with you, but that's what they showed. I mean,
no, I know.
Yeah, I'm not saying they lied on a financial report. I'm just saying that they chopped and scrimped and cut their way to that point, right? Now, today, we got Skeleton Crew has a release date of December 3rd. So they finally got that slated. And again, remember, Skeleton Crew was supposed to come out earlier this year. I guess it had problems. I guess they had more reshoots. Or it helped out Disney because that just would have gone to sink. That $40 million profit they showed on Disney Plus last quarter, if Skeleton Crew had come out on schedule, all else being the same, that means they would have showed probably close to a $100 million loss. This is kind of tying into.
Is that why they did that to Ironheart and shit then?
It's very possible.
That actually makes more sense now that I think about it than any of the other.
Well, it's still coming out, right? We thought they were going to can it, and then they just pushed it. I think part of it was I think part of it was really that they knew they were retooling the MCU because nothing Kevin Feige was doing was working. It was all sucking. But there was almost, in retrospect, there was almost no way that Disney was going to shit can the black female superhero that's getting Iron Man's leftovers, as what it was. So there's no way they were going to can that show. But yes, pushing it back the whole year. Yeah, it's a Disney Plus show. You notice, look, how many new big Disney Plus shows have come out this year? Like Marvel, Star Wars kind of stuff, like that kind of budget. Echo, Acolyte, that's it, right? Tomorrow's August 1st. The last 2 or 3 years, we've had by now at least 4 major Star Wars / mostly Marvel, but Marvel shows.
So Disney. They're manipulating the numbers, basically, is what you're insinuating or suspecting. And I see where you're coming from. And yeah, because I'm sitting here going, how the hell are they profitable? Everybody else is running at billion-dollar deficits. I have multiple billion-dollar deficits.
They're cutting their way there. And they're still cutting it. This is what this is about. Walt Disney's
they're only
television
charging what, $7, $8, $9 per friggin' subscription compared to what HBO Max and others are doing. No way. And HBO Max still running at a deficit. And if anything, Zaslav's the one who's been cutting and hacking away to try and beat that deficit, as bad as it is. Paramount's the only other one that's not so bad, but damn, like last I knew, Disney was what?
$9 a month with ads. Yeah.
No, $10 billion in deficit as far as their streaming service or more?
Cumulatively, no. Oh, no. They're like 14, 15. Disney's television division is laying off around 2% of the workforce, 140 people. Cost-cutting plan. The cuts at Disney Entertainment Television will primarily affect Nat Geo Freeform, which used to be the Disney Channel, or no, ABC Family. That was Freeform. ABC Family, which there's nothing family about Freeform anymore and hadn't been for 15 years, and local-owned television stations, as well as marketing and publicity teams. Nat Geo in particular will see a 13% cut. No teams are being eliminated. The cuts come as Disney continues to cut costs in an attempt to save money and stem losses in its streaming business. Last year, Bob Iger said the company would lay off 7,000 people as part of a $5.5 billion cost-cutting plan. Those targets eventually swelled to $7.5 billion in savings, and 8,000 eliminated roles. So this is following the Pixar layoffs of about 14% of its staff. And if you remember, those Pixar layoffs, the people that they laid off were more specifically related to Pixar projects that were designed for Disney Plus. Like not the movies they were making that they were throwing on D Plus, but actual other little small Pixar Disney Plus specials, right? They cut all that down. They cut all that out. If you look at Disney Plus in terms of revenues, especially once you adjust for the price increases and everything else, Disney has been cutting their way to profitability. Like what we told you 3-4 months ago was that will only get you so far. You still have to show growth. And if you're trying to cut your way to profitability, that means you're eliminating what should be, if you had any talented people working there, it should be popular content that's getting new viewers in, bringing new eyeballs in, new paying customers in. But that hasn't been happening. Wednesday, August 7th, at 8 a.m. Eastern is when we'll begin the show. And the earnings call will crack off at about 8:30 Eastern. We'll get maybe a limited number of Q&As after it. I don't know what we'll get with that one. We'll see. But here's the kick. I truly don't know. This is where Disney is right now. It's off another 11 bips or 11 basis points, 0.11%, kids, for those of you out there wondering. And you can look here, the S&P 500. The S&P 500 was up 1.58 today. Disney was down 0.11. That's a really crappy beta. I mean, it's one day, I get it, but here's the deal. When you look, these are the stories that are out there. This is what we're talking about. Disney television unit hit with 140 layoffs. Disney to cut jobs in television unit. Wall Street, according to Zacks, is expecting earnings growth. Question is, will they get it? That's what we don't know, because I'm concerned with what happened with the parks this summer. Comcast out there, Universal, right? Universal saw about a 10.6% decline year over year in revenue at their theme parks. So everybody's experiencing that softening, right? But I think Disney, I'm wondering if they didn't feel it more harshly. Yes, they have been raising their prices more aggressively than some of their competitors like Universal. But I get the impression that the attendance there has been weaker. Like they have seen a bigger attendance drop than has Universal. And that being said, that would also account for the Walt Disney Company's continuous aggressive increasing in pricing. They're trying to find a stable center to where they can still show revenue growth with theme parks, right? And a lot of that's going to lean on the international side. Remember, Universal leans real heavily on that Florida park, that California park. Disney has 3-4 parks internationally. Universal has, I think, just the one, at least a major park. So it's very, very different dynamic. That's all going to change again next year with the opening of Epic Universe, I believe, in terms of them being even more competitive domestically, especially with the Orlando park with Disney. Theme parks are the Walt Disney Company bread and butter. It's not the bread and butter for Comcast, for Universal. The bread and butter for Comcast is still its broadband services, cell phone, internet, cable TV. That's it. On the entertainment side, the bread and butter still very much NBC Sports. I mean, so it's kind of the opposite. So when the theme parks don't do as great, it doesn't really hurt Comcast so much. When the theme parks aren't doing well for Disney, the whole thing goes down, because that's what's paying for it all. And the other thing that we have to look for is Bob Iger going to be able to show that direct-to-consumer, that Disney Plus was profitable for a second quarter in a row? We don't know yet. We do know that he seems to have been doing everything imaginable to get it to that point. They did release The Acolyte before the end of the second calendar quarter, third fiscal quarter for Disney, right? The Acolyte debuted, what was it, June 3rd? So a lot of that cost for The Acolyte is going to be taken off in the quarter. So let's say they spent $200 million on it, and half of the show debuted before the end of the quarter. You know, maybe they take off roughly half. They amortize, a portion of that cost. I don't know how exactly they do it on the books, but that would have come down. That's why they don't think they wanted to have Skeleton Crew in the same quarter. That's why these other shows were getting pushed off or canceled. And Bob didn't sound terribly confident during the last earnings call that they would be able to repeat that teeny tiny profit margin again. At least not for maybe another 2 quarters, meaning not this one that we're about to hear about. They may surprise, and I think that's what they would love to do. I think they would like to make a surprise on that one and make everybody happy. Can they do it? Can they do that with streaming? What does the subscription revenue look like for linear television? How much worse has it gotten for their subscription revenue for ESPN and the Disney channels, the package of channels that they sell to Spectrum, Charter, Comcast, everybody else out there? They're going to have to keep making more deals, basically giving away Disney Plus for free.
Well, remember, as I'm sharing in the background here, I mean, they're bundled with their main competitor now.
Yeah, with Max. Well, that's another thing, right? That we're going to have to hear about what is
for
what
$16.99 a month.
Right, and what good is this doing? Disney Plus and Hulu, it's mostly them. Max is $9.99 a month because these are all ad tier. These are all ad tier, right? So they're selling this as a bundle. They're discounting it. And one thing I do not like with I don't like the $9.99 Max. I know most people don't care. You don't even get 4K with it, which pisses me off. So, I mean, you've got to do the ad-free.
Yeah, basically it looks like you got to spend like the $30 or whatever. Actually, more like $30.
It's $30 a month with no ads. And for that, you get no ads Disney, no ads Hulu, no ads on HBO Max, and you get 4K on HBO Max. Once that Spectrum deal spreads, and Disney's going to have to answer this question, once that Spectrum deal spreads to other carriers, especially like Comcast, hey, favored nation status, we want the same deal. Disney's going to have to throw in Disney Plus to all of Comcast subscribers for free. There's a lot of $8-9 subscriptions that are going to go away, more than already have. So, you've got to factor that in. Yes, it gets them more eyeballs. They can sell more advertising, but that subscription revenue goes away. How long does it take before that balances out? Again, the streaming experiment, the proprietary streaming experiment. And when I say proprietary, we're talking about Hollywood studios, film and television studios that have been around forever. Comcast, Paramount, Disney, go down the list. Failure. It's a failure. It's a total failure. Stupid. It failed. I think they can keep pretending and lying all they want about how it's working, but in its current iteration, its current format, it doesn't work. And I throw Warner Brothers out of that for a minute because, again, HBO has been a cable channel for 40 years or whatever. That's not a streaming service. There was a streaming service that was born out of it, but HBO Max, it's all part of that. That's a completely different animal than any other streaming service out there. But even Warner Brothers has woken up to the fact that they still have to license their content out. You know, Disney's going to have to do the same. But the problem is Disney doesn't have anything that's worth the shit that anybody wants. At least not stuff they'd be willing to let out. They don't want to let out anything Marvel, anything they consider core. Like they're not going to go license the classic Disney Princess Library to Netflix for a year. They should. I mean, probably worth a lot of money, but they don't want to do it. So I'd be curious to see how this really boils down and what kind of cost-cutting measures they're really going to take, because right now, let's be honest, Wall Street doesn't seem to have a whole hell of a lot of confidence in the Walt Disney Company. Make sure you're subscribed to Valiant Renegade and join us every Sunday at 6 p.m. Eastern for the live show.